There's a party on global financial markets, but hardly anybody is there. With the first half of the year almost finished, it's time to look back, I guess. And you see here in the chart the performance in these first months of 2023 were quite impressive. Equity markets on a global scale, with the exception of China, were significantly positive. In Europe, more than 10% performance since start of the year. And also on bond markets, we look back in the most relevant market segments on a performance of 3–4%, which is actually quite okay for bond markets. So how can this be when at the same time the news flow, alleged banking crisis and recession in Europe and all those topics, at the same time the news flow was not that convincing? I guess the good performance of this first half year is easier to explain if you look back into the last year. Last year we had a massive slump in equity prices. Bond prices were declining significantly because, as we all know, interest rates going up, inflation on the rise, Europe entering a recession in the last winter. This is what was driving negative performance last year. And I guess it's quite easy to understand, once those negative factors abate, the outlook becomes better, then also markets come back. That's what they do usually. So inflation has declined strongly, further falling. Interest rates are topping out now. We see another 1–2 rate hikes from central banks, but that's priced in. And the economic outlook after the winter recession in the euro area has significantly improved for this year. And that's what markets are pricing. With the economic outlook going up, usually equity markets are rising. And with the high bond yield levels we currently have, also the performance from now on the bond markets is quite attractive. There's quite an opportunity for further decent performance, unless you think, well, but maybe markets have already exaggerated, have already risen too much. Is there already too much exuberance, optimism priced into markets? So with disappointments just around the corner. And I've brought a chart for that. If you look at the next chart, this is a global fund manager survey. So the large global investors are being asked, how optimistic are you invested currently? When the line is at the very top, everybody of the big investors is very optimistic. Therefore, the money has already been invested. Little cash left for further equity buying. When the line is at the bottom, the average large investor is very pessimistic, has a huge cash pile and still money left for investing. Where are we currently? As you see, we've improved slightly from this massive pessimism end of last year, but only a little. The level is still comparable to the low of the corona crisis or to the levels we saw during the great global financial crisis more than a decade ago. So what would make from this? There are enough experts out there who expect the markets to go down again, who are pessimistic in this respect. When I look at this chart, I cannot help but be rather more in the optimistic camp. So if the economy now massively disappoints to the downside, of course, markets will go down again in the short term. But given the current still quite high pessimism, I would think that the bar to cross is rather low. So if the economy is doing at least a little bit better than these not very high expectations, I would usually expect that markets in the medium term have further to recover, especially as most valuations on equity markets are not that high. So let's see and hope. All the best for you. Don't forget to register and give us a like. We wish you good luck and see you again next time.